Hey everyone, what's going on? It's Jason here. Today we're going over some of my top charging infrastructure plays coming up with Botting's new infrastructure plan. If you could, make sure you guys smack the like button below. It also helps out this video. If you're not a sub, make sure you guys hit the sub button, hit the little bell notification. Let's get right into it. Real quick, what I'm using here, I am using Webull. There's a link down in the description if you guys want to sign up. Down there, you get 2 free stocks worth up to $1,800 when you deposit $100. You also get the tier 2 NASDAQ views for 3 months. The first one on the list is Chargepoint. I know a lot of you guys maybe already know Chargepoint. Chargepoint is the largest of any of the charging infrastructure plays in America right now. Chargepoint is an electric vehicle infrastructure company based in Campbell, California. Chargepoint operates the largest online network of independently owned EV charging stations. As you can see here, obviously over the last 5 days, Chargepoint has went from a low right at $20.02 all the way back up to $29.84 at close and up to $30.75 in the aftermarket. Now, this isn't the highest that ChargePoint's been. If you bring the map back out again to the 3-month map, you can obviously see back here when the hype was going crazy for ChargePoint back in December, it was up to $49.55. I think it can definitely get back up there, and I definitely think right now you can still get in and make decent money, especially if you are investing in it for the long term. There could be a little bit of turbulence here and there as well, so you might be able to get at a better price point. I don't know that, obviously. You know, you could always play your cards either way you wanted to. But again, this right here is for a more of a long-term investor outlook kind of video. As we all know, obviously, electric plays are a long-term play, and I do feel like these plays, for me, are probably going to be in my portfolio for the next 10, maybe 15, 20 years, at least until they find something better than electricity. As you can see, just on the back on the 210 back here on February the 10th, it was up over $40. I know at one point on around February 10th anyway, it was up to like $44. So I definitely could see it going back up to $40. Again, $50 is a little bit on my high end, but I do think $40 is a pretty fair price for ChargePoint. I do think it can go there again, and I do think it can go higher than that, but that's on a long-term schedule. And especially right now with them getting a big boost off this infrastructure play, when it does get passed, a lot of money is being pumped into the charging infrastructure. It's going to help out ChargePoint and many others that we'll talk about today. We'll bring up the analyst tip rank real quick. Analysts do have this at an average price point of $39. That right there would be about $9 above where it is right now. They have a high of 46, which we have seen it go above that. We have seen it go to $50 already. So again, 46 is definitely possible. So this right here is a year out. Like, so if you looked at this in terms of like April of next year, right? This is their outlook looking forward. Obviously, sometimes these things go higher. It also depends on the market. They have a low of $28, but right now we all know, obviously, again, ChargePoint is America's largest charging stations. They own up to 70+% of the market share right now in America. So I think we can all agree that this thing is going up and up and up. We definitely could see $28, in the short term, right? We just went down to 20. But I'm talking about long-term outlooks over a year. I do think we'll be, if everything's in place anyway, I do think we'll be above that $40 range going into next year. Here's an article real quick going over ChargePoint as well. Bloomberg estimates that the number of EVs sold will increase from 1.7 million units in fiscal year 2020 to 26 million units in fiscal 2030. That's a big difference, right? So 1.7 million all the way up to 26 million. That means we need a lot more infrastructure in the next 10 years. But there's higher estimates, obviously, saying 31.1 million units by 2030. One way to benefit from this secular tailwind is by increasing exposure to EV stocks. Another way to play the growth story is to consider exposure to electric vehicle charging companies. Growth in the electric vehicle industry is impossible without proper charging infrastructure. Therefore, if the above estimates for EV adoption hold true, the EV charging industry stands to benefit greatly. Enter the ChargePoint Holdings, aka ChargePoint, which operates a network of electrical vehicle charging stations in the United States. Robust growth outlook. Given the possibility that the EV industry is at an inflection point, the company has a robust growth outlook. For the fiscal year 2021, the company reported revenues of $146 million with approximately 31,263 ChargePoint ports shipped. By fiscal year 2026, the company expects to ship 425,000 ports. For the same year, revenue is expected to land $2.1 billion. So we're going from $146 billion in 2021 to $2.1 billion in 2026, from 31,000 ChargePoint systems to 425 shipped Chargepoint systems. That's crazy. Therefore, the next 4 to 5 years are likely to be the best years for the company in terms of top line growth. Importantly, these estimates are realistic. Consider the following factors. First and foremost, the company has a leading market position in North America. The SPAC business combination has boosted its cash position to $650 million, with it likely to pursue aggressive growth. And they're getting even more money from Biden's infrastructure plan. According to the company, the growth charging infrastructure investment in the US and Europe is projected to come in at $60 billion through fiscal year 2030. That's a whole lot of money coming in. As the number of charging stations installed grows, the company's recurring revenue will also increase. Over the next 5 years, ChargePoint revenue will be more diverse. Additionally, as the subscription revenue swells, cash flow visibility will increase significantly. Another important point is to mention is that the software revenue increases. It's likely to have a positive impact on the gross margin. The company has expected gross margin to expand from 24% fiscal year 2020 to 42% fiscal year 2026. For the last fiscal year, the company reported cash used in operations of $92 million. However, economies of scale coupled with reoccurring revenue growth will ensure the operating cost cash flows turn positive relatively soon. Now that right there is reasons why I have ChargePoint as my #1 charging infrastructure in my portfolio. Make sure you guys are doing your own research in the companies as well. If you don't know, I am not a financial advisor, right? I mean, you're talking to a guy who's literally has a Rocco's Modern Live shirt on. So, make sure you guys are doing things like that. I have been in the market a long time. I like doing my own research and things like that, but make sure you guys are doing your own research. This is not coming from a financial advisor, but I do hope you guys appreciate some of my insights. The next charging play on the list is ticker symbol SNPR. This is an acquisition company, which is a SPAC company, SPAC'd with Volta Charging. Now, Volta Charging does stuff a lot different than a lot of other people in the industry. Volta Charging delivers free charging stations to the property owners, power to the electric vehicle community, and impactful brand stories to everyone. Now, again, they do free charging, right? And with their fast charging stations, they do 30 minutes free of charging as well. Now, Volta maintains the only charging network that is free to electric vehicle drivers and is always conveniently located. And like I said, they put these outside. Businesses get these and put them outside their businesses like that. They're bringing people to charge the cars and then come in and shop. There's a really good business plan. And also these systems, like I'll show you in a minute, they have a big advertisements on them. So this company's making money off advertisements. Volta is making money off of the businesses buying these charging stations as well. So they have an advertisement fund there. They get that. And they also, on the DC fast charging stations, the first 30 minutes will be free. But after that, you have to pay as well. Now, this company makes more of their money off of advertisements and selling the system at first to the businesses. Now, I do like their business model. It's different. Again, obviously, you're taking a little bit more. You're taking some risk here. Obviously, it's different than anybody else. But so far, it's been working very well for them. And I honestly like it. I think it's going to continue to work well for them. Now, what kind of business with electric cars are now booming and going to be booming into the future is not going to have these charging stations right outside their businesses or shopping malls or places like that. That way you come in and spend money. They're spending time there. You have to wait, let's say you're waiting 30 minutes or so, or maybe an hour charging your car all the way back up. What are you going to do in that time? Sit in your car the whole time, or you rather get out in the shop? The reason why they're there, right? They're bringing in business. I love this plan. Now, as you can see right here, it's very cheap right now. At the low the other day on the 25th was at $10.02. Right now, it's still at $10.98 in after hours, ending on Thursday. We can bring this back out to the 3-month real quick. And as you can see, they had a high of $19.33. So well below that right now. The 1st of March, they were selling at a little bit over almost $13.50. If you go back to the first little downturn we had right back here on their downturn right here, they were all the way up right here about like 16, 17 bucks before we had that market downturn. We've kind of come down from there. Again, they are still a SPAC company, so that affects them a little bit in terms of pricing. I think if they did have their own ticker right now, which I think will be like VLTA, I do think that would help them out. So I'm waiting for them to get that as well. But I did buy some down here at the $10 mark. At the end of the day, man, why not take a chance on a great company that has great growth opportunity? And I actually love the business model. Now, as you can see right here, here's Volta's website right here. You can tell what I'm talking about when I'm saying these charging stations have advertisements and things like that on them. So Volta is making money off advertisements. They're making money off selling them. So if you're wondering where they make their money from, they make their money off there, right? These businesses are paying, a premium price to get these put out here. and then they make money off the advertisements. That's how they pay for it. That's how they pay for the that's how they pay for the charging and everything like that. And again, they do have the fast charging, which 30 minutes is free. After that, you have to pay. So they're making money there as well. So the average dwelling time right now for businesses putting it outside is 92 minutes. So people are waiting around 92 minutes shopping. The average spend per visit is at $54. So it's upping that spend per visit. Yeah, people wandering through your shop, your malls or whatever, spending more money. And here's the system right here. Here's what it looks like up close. I've actually seen these in Atlanta though. We went through Atlanta as well. They're actually cool little neat stations. They definitely stand out above a lot of the rest out there that I've seen. The advertisements are nice, and I'm sure they're going to be making lots of money off advertisements to these, especially as this company grows. Obviously, as of right now, you can see the map right here where they have their charging stations. Like I said, Atlanta, you have them down in Miami as well. They're spread out as well, right? And this right here will definitely start growing and growing and growing more and more and more as this company grows, and especially right now with Biden's infrastructure plan. Right here's the advertisement side. Again, I think this right here is one of the biggest things about it that I actually love about this charging station. So this right here talks about Volta as well. On February 8th, Fortis Acquisitions announced a SPAC business combination with electric vehicle charging infrastructure company Volta Industries. Volta reported having 1,507 charging stations in fiscal year 2020. The company is expected to increase the number of charging stations to 26,242 by 2025. So within 4 years from now, they're wanting to have this up a little bit less than 4 years. They're wanting to have this from 1,500 charging stations, which I think they have a little more than that now. I think right now they're like 17 or 1,800. They're looking to get this exploded. That's a big growth right there to 26,242. With the growth, the company is expecting increased revenues of $826 million in fiscal year 2025 from $25 million in fiscal year 2020. So they're looking to go from $25 million, obviously last year's fiscal revenue, up to $826 million in 2025. That's really good growth. This would imply a 5-year CAGR of 100%. SNPR stock had touched a high of $18.30 and currently trades at around $11. I believe the correction is a good opportunity to accumulate shares. A reason to like Volta is the company's differentiated approach. One strategy is to have sponsor-supported charging stations that essentially act as advertising networks and enticements to stay and shop longer in sponsored locations. Since charging becomes effectively free, these electric vehicle charging stations have garnered attention. Coming back to the financials, Volta Industries expects EBITDA of $252 million by fiscal year 2025, which would imply an EBITDA margin of 30%, given the growth outlook and EBITDA visibility. A $1.4 billion pro forma enterprise value does not look very expensive. Next ticker up on the list is CLII. Now, CLII is another SPAC company. They SPAC'd with EVgo. EVgo is America's largest public electric vehicle fast charging network. They have the biggest fast charging network system in the United States. As you can see right here on the chart, their high on the morning of the first was up to $14.94. Now, as you can see right here, their highest on the first was $14.94. They did drop back down, though, throughout the day to $13.65 off that hype of the infrastructure plan. They currently trade at $13.66 at the end of aftermarket hours. As you can see, it's still significantly down from their top of $27.99. I do think a fair value right now, though, for the company, I would say is around $20, which, again, to me is still under that fair value of the company. And I do think this has great growth potential for a long-term play. Now, EVgo just announced 2 new partnerships. One was with GM to almost double their charging station outputs. They also just signed another deal with Myers to install EV charging stations at the grocery stores. EVgo, the nation's largest public fast charging network for electric vehicles and the only platform powered 100% renewable electricity, today announced a new partnership with Myers, a Midwestern retail, to install EV charging stations at its supercenters. The EVgo public fast charging stations will roll out this summer, providing Myers customers with the convenience of reliable fast charging for their vehicles as they shop. The partnership will add to more than 800 fast charging station locations EVgo already owns and operates today, while growing EVgo's footprint and base of more than 220,000 customers nationwide. EVgo charging stations are capable of powering all fast charge capable vehicles on the road today. Now, as I said right here, they are the nation's largest public fast charging network. They have 800 plus stations in 34 states, 67 metropolitan areas, and growing. And these also, remember guys, these also work on renewable energy. So they're powered 100% by renewable energy as well. They use solar energy and things like that to charge their stations, which is really awesome as well. So they use renewable resources to get the energy they use. And again, like I said, they did partner with GM to add 2,700 plus new EV charging stations nationwide. Now, there's 3 of my top plays I have right now in my portfolio for this upcoming electrification of America boom we got going on right now. And I do think these right here are great contenders for long-term potential growth. Now, again, you could get a better price point, maybe. I don't know. These prices could come down a little bit more maybe in the short term. I don't know. But for me, I just buy when I can. I don't really try to time the market. It's worked for me the past, almost 10 years now. And I think it'll continue to work that way for me. But again, if you want to try to time the market, be my guest. But I do think Chargepoint, Volta, and EVgo are 3 really great charging infrastructure plays that you should think about putting in for your portfolio. If you guys like this video, make sure you guys hit the like button down below. Make sure you guys hit the sub button as well. If you want to join our Discord, you can click down below the Discord link. Love to have you guys. Over 1,000 people in our community in Discord. Also, there's a link down below for Patreon. If you guys want to be a part of the Patreon link as well. Be in our weekly secret streams that only Patreon members are allowed to be in. And be at the plays faster than anybody else. Thank you guys for coming and hanging out. Thank you guys for watching. I'll see you guys on the next video.